On Business Incorporated today, African Union calls for local production of COVID-19 vaccines. South Africa unveils post-riot relief eases virus lockdown. And as Angola renews its privatization drive, we'll be looking at the implications for businesses and the economy as a whole. Hello and welcome to the program. I'm Chimeze Obi Iwago. First, the intraday market numbers. And kicking off from Africa, markets were more in the red at intraday, except the NGX index. The NGX all-share index was up 0.24% on the back of earnings and interim dividend announcement expectations. In South Africa, the JSE index tilted south, down 0.39%. The EGX 30 in Egypt was also negative, down 0.5%, and the Nairobi Stock Exchange closed on Friday negative. It was the same sentiment in the Gulf region, as the only gainer at intraday was Abu Dhabi. The UAE markets went sideways. While Abu Dhabi was up almost 1%, the Dubai financial market was down 0.56%. Elsewhere, Saudi Arabia was down 0.09%, while the Qatari market was down 0.91%. Let's cross over to Europe now. Stocks pulled back this morning, tracking lackluster global sentiment as investors monitored corporate earnings and looked ahead to a key meeting of the U.S. Federal Reserve. Let's get an insight from Chelsea. Hello, Chelsea. Good afternoon. Well, corporate earnings, U.S. Fed on tap this week. What's the sentiment in the European space? What corporates are investors tracking?
Unfortunately, I think we've lost sound connection.
Yes, talking about what the...
there we go. Yeah, we're back.
Sure. Yeah, talking about what investors are looking at today. We've got corporate earnings. We've got the U.S. Fed. What are the major corporates investors are tracking?
It's going to be a very busy week for investors around the world. As you mentioned, one of the biggest things investors are going to be watching is the Federal Reserve. And this meeting is really crucial because we've heard a lot of talk recently from the Federal Reserve about potentially starting to pull back some of that monetary stimulus that has been supporting markets, that has been supporting the economy through the coronavirus pandemic. Right now is an interesting point because we have on the one hand inflation, which does remain quite high. On the other hand, in the U.S., they are starting to struggle with a rise in coronavirus infections once again. So it'll be really interesting to see how that impacts the Federal Reserve's plans to start bringing back its monetary policy. Another big item this week is going to be just a flood of corporate earnings that we're going to get in the U.S., here in Europe as well. One of the biggest ones is going to be Volkswagen here in Germany, which is dealing with a lot of supply chain issues as well. European banks are going to be reporting earnings, and of course the very big tech giants in the U.S., companies like Apple, Tesla as well. So that's always something very much an investor's focus.
On the IFO index, a closely watched indicator of the German economy, fell unexpectedly in July, according to the data released this morning. How are markets reacting to that news?
Well, this was definitely a disappointment for investors and for businesses. We did see the level of confidence in the economy decline in this survey, more than markets had been expecting. A big part of that does seem to be supply chain issues, things like shortages of raw materials as well as semiconductors. But the other thing really hanging over businesses right now is, of course, the Delta variant. Cases are starting to rise here in Germany. Many businesses fear that we will have to see a return of some restrictions at some point. So far, the government is really staying its course. They don't expect any large lockdowns or wide-scale restrictions, but it's certainly something that businesses are growing ever more wary of as we continue to see the cases rise.
And speaking of supply chain problems, German car makers Volkswagen and BMW have said they are still struggling with chip shortages. Tell us more.
So this has been a major problem for the auto industry basically since the start of the year. We've seen here in Germany basically all of the major automakers have to cut back their production because they just can't get their hands on enough chips to continue making as many vehicles as they want to. That also has coincided with the return of demand as economies reopen. BMW is the latest company to have to cut back production. They said yesterday that they're going to be shutting down one of their factories in southern Germany until the second week of August. So that's something that's going to really dent their production for this quarter. We've also heard from Daimler. They also are struggling with this chip shortage, but they've managed to sort of mitigate the impact of that on their bottom line by switching most of their production into the really high value, profitable vehicles. Volkswagen, of course, one of the largest automakers in the world, is very much struggling with shortages as well. They're going to be reporting earnings this week, so it'll certainly be interesting to see any updates they give on their outlook for a potential end to this supply chain shortage.
Right, the week seemed heavy on earnings, and we'll continue to track those numbers as they come in. Thank you very much, Chelsea. Enjoy the rest of the day. And China appears to have set the tone for stock markets in Europe and the UK. Every major index in the red on Monday morning. It's intraday now. Let's see what's happening in London. Let's talk to Juliana. Hello, Juliana. Good afternoon. Well, in the morning, we saw the FTSE 100 down 0.4%. There seems to be a fairly clear pattern. Banks and financials were the biggest fallers. Bring us up to speed with the state of the markets at intraday.
Good afternoon, Chimeze. You're right. It's not been a great start to the trading week here in London. And as you said, it follows really the ripple effect that we saw in China on the Hong Kong index. And that's because there's been another crackdown by Beijing authorities on all the big domestic tech titans. In fact, the Hang Seng index lost all of their gains that they've received this year. And again, as Chelsea was just saying, there's lots of updates expected today, and this is really going to set the tone for the remainder of Q2. We've got the likes of Tesla, Alphabet, Facebook, Apple, all of the big major companies are going to be giving their updates. And we have seen that the banks, they're also getting a little bit anxious. We are expecting some financial updates from those groups there, even though all indications suggest that there is enough in the coffers. If, for example, the Federal Reserve do start saying they're going to taper down some of their asset purchasing, then that could be a cause for concern for banks here in the UK. But let's have a look at the numbers at intraday. The FTSE All-Share is down 0.17%. The FTSE 100 is also down by 0.29%, and the FTSE 250 slightly up at 0.03%. In the currencies market, the British pound is up on the US dollar by 0.23%, up against the euro by 0.09%, and also up against the Japanese yen at intraday by 0.03%.
Meanwhile, an interesting new front may be opening in the relationship between the UK and China. The government is considering backtracking on allowing Chinese companies to operate British nuclear power stations. What are we learning about this?
Yeah, it's an interesting story. We haven't really heard anything about this by the British government, but the Financial Times are leading with this, as well as the Telegraph. And this is really about the new chapter in the frosting relationship between Beijing and London. Last year, the Foreign Secretary Dominic Raab did say it's no longer going to be business as per usual between China and Britain. And this is just one of several instances of this. Of course, it started last year with Huawei and it being expelled from building any part of Britain's 5G network. And this particular story is about nuclear power and a deal that was brokered in 2015 by the then Conservative Prime Minister David Cameron with Xi Jinping. I believe about 20% of China's nuclear power plant was supposed to help build 2 power plants here in Britain, one of them being the £20 billion controversial Sizewell power plant. But now there are some suggestions that Britain no longer want China to be involved in this. In fact, those close to the matter say it's already a done deal, and they just hope that China walk away peacefully and there'll be no tensions. Again, this is all part of geopolitics. We know that not just Trump's administration, but the Biden administration have really been pushing back on China. They don't want them involved in any sensitive technology, infrastructure or apparatus, and they also want to protect their own supply chains, and that appears to be what's at the crux of this situation here. But again, haven't heard anything yet officially from the British government on this story.
And talking about corporates now, Ryanair is expecting to fly 100 million passengers during this financial year after a surge in summer bookings in recent weeks, although it warned that it does not expect to make a profit this year. But then, looking at it, 100 million passengers, even with the Delta variant spreading.
Oh yeah, people in Europe they like to frolic on the beach, Chimeze. They do love their holidays, and that's what the airlines are they're hoping and waiting and wishing that is going to be the case. But of course, this is all dependent on COVID-19 and, as you said, the Delta variant, or if there is going to be any other variant. But if you have a look at what's happening on the continent, it's not as bad as it seems. I believe nearly 50% of all EU adults are fully vaccinated. Over 50% of British people are fully vaccinated, and the governments around this European bloc have started to open up their borders and allow some sort of travel. Ryanair, they reported their Q2 update earlier today. Losses are still increasing. In fact, their losses have jumped from 184 million euros this time last year to about 293 million euros this year. Their shares were up at early trading, and the reason why is because their boss suggests that people are starting to book. People are hopeful that August is going to be a much better month and they will be enjoying their summer holidays, which is why their shares are up, and they have predicted that there would be 100 million passengers flying with them. I won't be one of them, I'm afraid, Chimmy. I'm still waiting for COVID to pass, but there are some that are more optimistic than others, and it's those passengers that the airlines are really dependent and relying on.
All right, Juliana, we'll continue to track those numbers as they roll in this week. In the meantime, enjoy the rest of the day.
Thank you.
And in Asia, shares in Hong Kong dropped sharply by the Monday close, wiping out the Hang Seng Index gains for 2021 once again as Chinese tech and education stocks plunged on regulatory pressure. The broader Asia-Pacific markets were largely lower, with mainland Chinese stocks also falling. The Hang Seng Index in Hong Kong fell 4.13%, leading losses in the region. Mainland Chinese stocks also saw sizable declines, with the Shanghai Composite down 2.34%, while the Shenzhen component fell 2.64%. In other markets, South Korea's Kospi closed 0.91%. In Australia, the S&P ASX 200 ended the trading day flat at 7,394 points. Returning to trade following holidays on Thursday and Friday, Japanese stocks bucked the overall trend regionally. The Nikkei 225 jumped 1.04%. And in the U.S., stock futures slipped after the major averages finished the previous session at record closing highs and ahead of a busy week of earnings reports from technology's heaviest hitters. Dow Jones Industrial Average Futures declined 266 points. S&P 500 and Nasdaq 100 futures also both traded in negative territory. Those losses came as shares in Hong Kong suffered heavy losses during the Asia trading session on Monday, with the Hang Seng Index in the city plummeting 4%. One of the busiest weeks of earnings reports is on deck in the week ahead, with Tesla kicking it off after the closing bell. Last week, CEO Elon Musk said the automaker would likely start accepting Bitcoin for vehicle purchases again. Big tech giants Apple, Alphabet, and Microsoft are all set to report on Tuesday, and Google, Facebook, and Amazon will also report later in the week. Investors will be watching the Fed's two-day policy meeting beginning Tuesday. And on the global oil market, prices were a little changed in early trade as investors balanced concerns about fuel demand from the spread of COVID-19 variants and floods in China against expectations of tight supplies through the rest of the year. Brent crude futures for September fell 3 cents to $74.07 a barrel, while U.S. Texas Intermediate crude was at $71.99 a barrel, down 8 cents. Both contracts recovered from a 7% slump last Monday and marked their first gains in 2 to 3 weeks last week as investors bet demand will stay strong amid falling oil stockpiles and rising vaccination rates. However, coronavirus cases continued to rise over a weekend, with some countries posting record daily increases and extending lockdown measures that could slow oil demand. China, the world's largest crude importer, has also seen a rise in COVID-19 cases, while the nation battles severe floods and a typhoon in central and eastern parts of the country. And to metals now, gold prices inched lower in early trade, hovering around $1,800 per ounce psychological level as the U.S. dollar held firm, with investors turning their attention to the Federal Open Market Committee's meeting this week. Spot gold fell 0.1% to $1,799 per ounce. U.S. gold futures fell 0.2% to $1,798 per ounce, while no policy change is expected from the committee's meeting on Tuesday and Wednesday. Investors will look out for clues on when the U.S. Central Bank might rein in its easy monetary policies. In other metals, silver rose 0.1% to $25.18 per ounce, while palladium and platinum were flat at $2,671 and $1,061 apiece. And after the break, we look at major developments on the African continent. So stay with us. Angola is aiming to sell a majority stake in insurer Ensa by the end of November in what will be among the biggest privatizations so far under the southern African country's pandemic-delayed reforms. Africa's second largest oil producer is aiming to privatize 172 state-owned enterprises, including non-core assets of national oil company Sonangol, between 2019 and 2022. To look at what is driving Angolan government's renewed drive to privatize state-owned industries, I'm being joined by the Associate Practice Lead Sub-Saharan Africa at Frontier View in London, Matt Kiniger. Good afternoon, Matt. Thank you very much for joining us on the program. Hello, Matt. Good afternoon. Well, if you can hear me, what is driving this privatization program in Angola, and is it expected to be successful? All right, well, we'll get to try to fix that. Let's look at what's next on the board. African Union has called on global pharmaceutical firms should license production of COVID-19 vaccines in Africa rather than contract deals that critics say restrict vaccine independence. Africa will start to receive the first deliveries of 400 million doses of Johnson & Johnson vaccine this week. With the continent in the grip of a severe third wave of infections, it's hoped the influx of vaccines could boost immunization campaigns. So far, just 60 million shots have been administered in a population of 1.3 billion. AU Special Envoy Strave Masioa was speaking after Pfizer and BioNTech announced a fill and finish deal with South Africa's Biovac Institute.
Producers in Africa, rather than to produce under contract, because we want to be treated the same way as they produce in India. Okay? If they can produce under license in India, they should be able to produce under license in Africa.
And South African President Cyril Ramaphosa has unveiled a new relief package to help businesses and individuals recover from a week of deadly riots and coronavirus curbs as he eased lockdown restrictions amid slowing infections. The measures include reinstating a monthly welfare grant of 350 rand for the poor until the end of March, a 400 million rand state contribution to a humanitarian relief fund and support for uninsured businesses. In a televised speech on Sunday, the president said the government will also expand an employment tax incentive and give companies an additional 3 months to pay taxes collected from their workers.
Latest figures suggest that we have largely passed the peak of the third wave of infections, although there are areas in the country where we still need to be concerned because the rates of infections have not yet shown signs of decline. The measures we put in place for the past 28 days, alongside the continued adherence of South Africans to basic health precautions, have been effective in reducing the rate of infection. However, as we have observed before, there are significant differences between provinces. As infections in Gauteng fall, daily new infections in the Western Cape, in the Eastern Cape and KwaZulu-Natal continue to be on the rise. There has also been a concerning rise of infections in the Northern Cape after a period of relative stability. In all these cases, infections are being driven by the Delta variant, which, as we said before, is far more transmissible than previous variants. Now, more than ever, we need to adhere to the basic precautions so that we can limit the spread of the virus from one person to another. The overall decline in new infections means that it is possible to gradually ease some of the restrictions on gatherings, movement, and the sale of alcohol.
Ramaphosa, South African president. And in Algeria, the country has reimposed restrictions on gatherings starting from today, Monday, July 26, to cope with a rapid spread of the more infectious Delta variant of the coronavirus that has led to an increase in the number of patients. The measures, which will apply to 35 out of 58 provinces, include mainly closing gyms, cultural centers, leisure venues, beaches, and used car markets, as well as an 8 p.m. to 6 a.m. curfew. All gatherings, including wedding celebrations, will be banned, while cafes and restaurants will be allowed to provide only takeaway services. Delta variant caused 71% of total infections for July. The North African country has so far reported a total of 162,155 infections, including 4,063 deaths since the pandemic began early last year. And that's it on the program. Thank you for watching. I'm Chimeze Obi Iwagu.